Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. The title of the video is how to use Google Finance Acid Test. All right. Today is the 13th of April 2014, and the time in London is 4 minutes past 5 p.m. in New York, 4 minutes past 12 p.m. This tutorial is suitable to investors and traders. At the end of this video, one will be able to understand what is the Google Finance Acid Test, how one can achieve the Google Finance Acid Test, what are current assets, current liability, and current asset ratio. We will look at Cisco stock and also Verizon stock. Let's get started. All right. So we're going to discuss what is a Google Finance Acid Test. So we're going to Google Finance. So what we need to do, for instance, you can go. So I'm going to start afresh. So we go to Google search. All right. So we are looking for www.google.com, or we can just put in our browser the word finance. Okay, so type in finance and then enter. Okay, all right, it's waiting for my browser to load the page. All right, so when we type in finance in Google search, the first website that we will see is Google Finance. Okay, stock market quotes, news, and currency. All right, so we click on it, Google Finance. This is Google Finance. All right, this is the page for Google Finance. All right, so if you are in United Kingdom, you will have a www.google.co.uk /India. All right, so you will have the your local Google Finance. All right, this is very important. If you are in the United States, you will have a www.google.com /finance. All right. So once we are here, what do we need to do? We can type in the epoch of the stock that we want to analyze using the Google Finance Acid Test. So you will be asking yourself, what is the Google Finance Acid Test? The Google Finance Acid Test is a quick verification to check if a business is under pressure in a short term. I can say this again. The Google Finance Acid Test is a quick verification to check if a business is under pressure in a short term. This allows bullish market participants to avoid risky stocks. So by doing the Google Finance Acid Test, we will be able to avoid risky stocks if we are bullish market participant. All right. In this video, I will show traders how to do the Google Finance Acid Test. But before we continue, I'm going to explain to traders, because we're going to use what is a current asset. All right. So we want to understand, we're going to use current asset, current liability, and also the current asset ratio. For these purposes, we're going to explain to traders what are current assets. Okay. Current assets are assets that are quickly or readily converted into cash within a year. They are liquid assets. They include stocks, cash, prepaid expenses, accounts receivable, cash equivalents. These are assets that can quickly be converted into cash to pay short-term liability, all right, without selling the fixed asset. So the opposite of a current asset is fixed asset. So when we are talking about current asset, these are assets that the business can quickly convert into cash, into real money to pay short-term debts. Right? This is what you need to understand. So for instance, if a company has to pay their short-term debt and they do not have enough cash to pay them, they can liquidate the current assets, all right, to pay their short-term debt. All right. So now we know what is a current asset. The next thing we want to understand is what are current liability. Current liability are all liability that are due within a year, within the fiscal year. So these are liability that are to be settled in cash within the fiscal year. All right. Now, these amount of current liability include amount that we need to pay to our suppliers. The business has to pay to their suppliers. All right. These are also amount that need to be paid to our short-term creditors. All right. The short-term liability also include the tax that we owe to the government, the VAT that we need to pay to the government. All right. The provision that we made for possible litigation costs. This is also including the dividend that we need to pay our shareholders. So these are current liability. These are money that we need to spend on short-term expenses. So one of the short-term expenses is dividend that we need to pay to the business has to pay to their shareholders. Okay, it's also the tax that we owe to the tax man. We cannot say to the taxman to come back another day. We have to pay the tax, so we pay them quickly. The business has to pay their VAT, all right, in London. All right. This also includes the short-term borrowing, the money that we owe to the bank that we need to pay, all right, in a short period of time. So we are talking about the current assets and also the current liability. So the first thing that we need to understand, the word current asset, is telling us that this is the first thing we need to have whenever you hear current asset or current liability. You must think of a short term. So current assets are assets that we can sell quickly within a year to pay our short-term debt. The current liability are short-term debt. This includes dividend, the tax that we must pay to the tax, the tax man, the short-term borrowing, all right. These also include the money that we need to pay to our suppliers, all right. Because if we're going to use the Google Finance Assist test, we must use the current asset and also the current liability, all right. So that's why it's so important to understand what is the current asset and the current liability, all right. I'm going to bring on now one financial instrument. The first one is Cisco. And we're going to type in the EPIC. You see here, we are in Google Finance, all right? www.google.co.uk/finance, okay? If you are in India, you will have the Indian Google Finance. If you are in France, you will have the French, Google Finance, okay? So you will have your local, Google Finance. So I'm in London, that's why I have here Google Finance for United Kingdom, but I can search for any stock, whether they are listed in United States or India. I can type in the EPIC in this section here where I'm moving my cursor, and I can see the economy news, the financials, for that particular stock, So now I'm going to check on Cisco. The EPIC is CSCO. As I was typing, you can see that right here is Google is helping me, you see here, Cisco Systems, By the way, the Cisco stock is listed on the Nasdaq 100. It's American stock, so though I live in London, I trade the American stocks, all right? So it does not matter which financial instrument you are trading, whether you are trading a stock in India, you are trading a stock in Singapore, in Japan, in China. You can use Google Finance, okay, to check the economy news. You see here, the first one here, where I'm moving my cursor, the news, all right, and also the financial. I'm going to click on the financials. So once you type in the EPIC, the next thing you need to do is to click on the financial. This will allow you to see the current asset and the current liability. And I will show you how we will do the Google Finance Acid test. As I explained to you at the beginning of this video, the Google Finance Acid test is a quick verification to check if a business is under pressure in a short term. This allows bullish market participants to avoid risky stock. So you want to buy and hold a stock, you want to trade a stock, all right? You want to see whether that stock, or you want to buy and hold, if you are bullish, you want to know whether that stock is under pressure, whether the smart investor are willing to buy it at this point in time, at this junction or not. So by using the Google Finance Assistant, we will be able to filter out, risky stocks. All right. So how do we do the Google Assistant? So now we are looking at, we are analyzing Cisco stock. I'm going to click on now here, where I'm moving my cursor, for the financials. Now, by the way, before I continue, I want to recommend to traders a particular web page. I'm going to go to www.stochasticmarkd.com, and I want to recommend to traders a special web page where traders can learn how to use the Google Finance. There are tips and tricks that one can learn at www.stochasticmarkd.com/finance, by understanding how one can, analyze a stock using Google Finance. So when you come to stochasticmarkd.com, moment please, waiting for my page to load. You will click on Finance. You see here? If you click on Finance, you can see here, you see here. So you see the drop-down menu using Google Finance, Fundamental, Financial, Balance Sheet, Cash Flow, Money Management, Reward Risk Ratio, because I prefer the word reward risk ratio instead of risk reward, and also market cycle. So this is the page that I recommend to traders. When you put your cursor on Finance at www.stochasticmarkd.com, you can click on any menu here in the drop-down menu and to check this tutorial. So now we have Cisco. We click on Financial. The financial include what? The income statement. So what we are looking at here, this is the income statement. For the purpose of this video, we are not going to talk about the income statement, all right? The financial also include the balance sheet and the cash flow. So when you click on you see here, the financial, you have the choice to click on the income statement, which is now open. I have also the choice. Now I'm going to click on the balance sheet. Here is the balance sheet for Cisco. And I have also the choice to click on the cash flow. Here it is. By the way, traders can use Google Finance or Yahoo Finance, to do exactly what we are doing here, all right? But I prefer to use the Google Finance this time for the purpose of this video, all right? So when we click on the financial, we have the choice to click on the income statement, the balance sheet, and the cash flow. For the purpose of this video, talking about the Google Finance Acid test, we will click on the balance sheet. Remember that. Now we click on the balance sheet. This is the balance sheet for Cisco. But another thing you need to remember, when you click on the balance sheet, you can see the quarterly data, the data for 3 months. So now what we are looking at, you see here, is now black. This is the quarterly data. So the balance sheet that we are looking at for Cisco, this is a quarterly data. Now, if you see here, when I'm moving my cursor, there's another option here, the annual data. If I click on the annual data, here it is. This is the annual data for the balance sheet for Cisco. If I click on the quarterly data, which is right here, I will see the quarterly balance sheet for Cisco. For the purpose of the video, we will click on the annual data. This is very important for the Google Finance Assistant. In order to use the Google Finance Assistant, this quick verification to check whether a business is under pressure in a short term, all right, we will use the annual data for the balance sheet. So we come to Google Finance, we type in the stock. So if you are using, for instance, you are looking at Verizon, you will put in the Epic VZ, or you can type in Verizon, and Google will help you. Once you reach the page for the stock that you want to analyze, or the stock that you want to test, all right, you will click on the financial. The next thing you need to do, once you click on the financial, you click on the balance sheet. After clicking on the balance sheet, you must click on the annual data. All right, very, very important. Now, how do we achieve the Google Finance Assist test? We're going to compare, okay, the total current asset. Now we know what is the current asset. We're going to compare the total current asset to the total liability. This is very important for us for the Google Finance Assist test. All right, so you can see there we have many data. This is 1 year. You see the column, one column represents 1 year because we are looking on the yearly chart, yearly data for the balance sheet. Each column here, as Google put it, this represents 1 year data. You can see here this 2010 for Cisco. The annual data for the balance sheet is in this column. For 2011, this is column. This is the column for 2011. This is the column for 2012, and this is the column for 2013. Because we are now in 2014, you can see that we are not yet at the end of the year. I mean, you can see that Cisco we will have another data in July, because you can see it's July. You see here, July, end of July 2010, end of July 2011. Some company will present their annual data at the end of December. Some will present their annual data at the end of July. So for Cisco, it's at the end of July. You see here? So at the end of July 2014, Google will put here a new column that will show us the annual data for this stock. Pay attention carefully, because we want to understand how to use Google Assist test. The two data that we want to pay attention to, when we click on the balance sheet on the annual data, we want to look at the total current asset. Remember that, very, very important. Total current asset. All right. If you miss something, you can replay the video. All right. So we want to look at the total current asset and the total current liability. We are going to compare the total asset to the current liability. Pay attention. Maybe you have watched our video before, and I have talked about this, but I want to explain more thing to you. So I recommend to traders to watch the full length for this video, as I'm sharing with you this important method of analyzing a financial instrument. Right? So let's go to, you see this 2010, you can see that the total current asset, if you look here, in millions of dollars. Okay, you see here, in millions of dollars. So the total current asset for Cisco in 2010 was 51,421 millions of dollars. So in fact, 51,421 millions of dollars. That's 51 billions of dollars. All right, 421 millions. All right, because what you are seeing here is in fact millions of dollars. So 421 millions of dollars. All right. So in 2010, at the end of July 2010, the total current asset for Cisco was 51,421 million. All right. At the end of July 2011, for Cisco, the total current asset, you see here where I put my cursor, total current asset in 2011 was at 57,000 231 millions. At the end of July 2012, the total current asset for Cisco was $61,933 million. Now, at the end of July 2013, the total current asset for Cisco was $65,521 million. Now, so you can see that we have 4 years data here, 2010, 2011, 2012, 2013. The first thing trader must pay attention to when we are doing this Google Finance Assist test, we want to see the trend of the current asset. You see here, 51,000, 57, 61, 65. You can see that there is an up move here. The current asset for the total current asset for Cisco is increasing each year. This is beautiful. If you want to buy and hold a stock for a long period of time or for a short period of time, at least it will be great to see if the current asset is increasing. So you can see here it's increasing, nice. So quick verification, check whether the current asset is increasing. So 51,000, 57,000, 61,000, 65,000. So the total asset for this stock, this Cisco stock, is increasing each year. Beautiful. So at least this just okay. It's just a quick verification. We know okay, it's looking good. But that's not the end of the test. The next thing we're going to check is the current liability. So you can see now in 2010, at the end of July 2010, the total current liability, can you see on your chart, total current liability was $90,233 million. All right? You see here, billions of dollars. Okay? This is the total current liability. So you understand when I explain to you what are current liability. All right? These are all liability that are to be settled in cash within the fiscal year. This includes money that we should pay to our suppliers for goods and services, short-term borrowings, okay, current tasks, dividend that we need to pay, and the provision that we have made for possible liabilities. All right. So this is the current asset. The next in 2010, this is the current liability, the total current liability at the end of July 2010. What we need to do, once we see the total current liability, we want to compare it to the current asset. So the total current liability at the end of July 2010 was $19,233 million. But look, the current asset is 51,421 millions of dollars. So you can see that 19,000 compared to 51,000 is the current asset is more than double, more than double the current liability, which means that this company at this point in time has enough liquidity, all right, to pay, each short-term debt or each short-term liability. So for instance, if all the short-term creditors want their money back within a year, Cisco is able to liquidate or to sell, assets that are readily liquid, is 51,421 millions of dollars. They can quickly pay 19,233 millions of dollars. So it's very important for us, for this, the purpose of this video, Google Finance Assist test, that the total current asset is at least double the current liability. If a company, has enough current asset, total asset, to cover their short-term liability, that company can survive in a short period of time. This is very important. So if all the short-term creditors want their money back, they will be able to pay their short-term debt, which means they can remain in the business within this fiscal year at least. Very important. So for the purpose of Google Finance Assistant, you want to buy and hold the stock for a short period of time. One of the tests, there are many tests that we will do before we buy. All right, I repeat, there are many verifications that we can do before we can buy and hold a stock. But one of the quick verifications that we can make, this is what we call the Google Finance Asset Test. So these are the two things that I look at quickly when I'm checking a balance sheet, all right? When I want to buy stock and hold, the first thing that I quickly check, all right, I want to compare the total current asset to the total current liability. So in 2010, this company, Cisco, has enough liquidity to cover their total current liability. Let's move on. In 2011, at the end of July 2011, the total current asset was 57,231 million dollars. All right? But the total current liability is 17,506 million dollars. So you can see that 57,000 compared to 17,000, Cisco again is able to pay their short-term debt easily. All right, they have enough current assets to pay their short-term debt easily. The next year, which is 2012, at the end of July 2012, the total current asset was 61,933 million dollars, but the current liability, the total current liability in 2012 was 17,731 million dollars. So the total current asset was 61,000 and more, but the total current liability was 17,000. They have enough liquidity, okay, 3 times, okay, the current liability, so 17 times 3, 61,000, you see, it's higher than 3 times 17, all right? So you can see that they have enough liquidity to pay their short-term, liability. The same thing we see here. In the next year, 2013, which is last year, the total current asset was 65,521 million dollars, but the total current liability in 2013 was 21,996 million dollars. So you can see that 65,000 and more compared to 21,000, we can see that they have more than 3 times, liquidity to pay their short-term liability, which is great. So I can say at this point in time, I'm not looking at only 1 year. I'm looking at different years to see a trend. So this is a company, all right, that is increasing their current asset. If we look at the trend for the total current liability, 19,000 for short-term liability or short-term debt, all right. The following year, they cut it down. They cut their borrowing down, which is great. It's good for company to cut their borrowing down. From 90,233, they cut it down to 17,506 millions of dollars. Great, all right? We want to see the trend to be going down for the current liability, and we want the trend to be going up for the total current assets. The following year, it went up a bit, but not too much, because at the beginning it was 90,000. We are still in a range of 17,000, same like 2011, so it's not too bad. But this year, the year 2013, we see a bit of increase. It went up to 21,996. But the next thing we need to check is to know why they have why the current asset went up Okay, so you see from 17, it went from 17, stay 17, now it went to 21,996. You can check the economy news, okay? Check why now the current asset went up, okay? You want to know why the current asset went up, okay? Very important. But the most important test is to compare the short term, okay, the total current asset to the total current liability. For this verification, we can see each year, all right, 2010, 2011, 2012, 2013, Cisco has passed the Google Finance Asset Test. What I will say to traders, all right, trader will say to me, okay, once he passed the asset test, I must buy. No, this is one of the verification that we will do when we want to buy a financial instrument, but this is not the end of the verification that we must do before we buy. All right, I will be recording more video in the future where I will explain to traders what they need to pay attention to. But when we are looking at the balance sheets of a business or any company, we must do what we call the Google Finance Asset Test. This is a quick verification to check if the business is under pressure in a short term. This will allow us, okay, if you want to buy the stock, to avoid risky stocks. All right? It makes sense? It is also powerful. So what is now, I'll mention to you that we want to understand what is the current asset ratio. The current asset ratio is calculated by dividing the total current asset by the total current liability. So at this point in time, in 2013, the current asset ratio will be 65,521, which is the total current asset, divided by the total liability, which is 21,996. Now, the higher the current asset ratio, the more liquid the company is. So if the current asset, all right, the total current asset is quite high, 3 times, 4 times, all right, the total current liability, the ratio between the total current asset and the total current liability will be high. We want a multiple 2 or 3 or 4, all right? That will once we can very quickly check the current asset ratio, okay, for Cisco. Once we know that the current asset ratio is more than 2, we know that the company in the short term is able to have enough liquidity, double the amount of the total liability, and they can easily pay their short-term debt. So that company is not under pressure in a short term. Ladies and gentlemen, you may be wondering why you need to know this. Suppose you are a day trader, all right, or a swing trader, and you want to buy or you want to sell a financial instrument. This asset test will also allow day traders and swing traders to sell a financial instrument. But there are other issues that we will talk about. One of them is what we call buy as you earn. Buy as you earn. These are method of investment that are proposed to employees to buy the company share at the market price each month. Now, but before you sell any shares or any stock, you need to be very careful because of this. This one of the thing that is messing up day traders and swing traders. Buy as you earn. There are mechanisms to protect the company shares. Nothing wrong with that. They are not manipulating the market. They are protecting their stocks. They don't want people to sell their stock, and they can do what they want to do to protect their stock. But what we want, the exercise that we are doing here, or the demonstration that we are trying to achieve here, is to allow traders to stay away from companies that are under pressure in the short term. Because if the company cannot survive for 1 day or 2 days, they're not going to survive for 5 years. So for instance, you want to buy and hold a stock. If the company cannot survive for a year, is it going to survive for 5 years? You see now, all right? So it's very useful to have this asset test done. But as I told you, and as I'm repeating this 100 times, this is not the only test one will do before one can buy or sell a financial instrument. This is just one of the tests. This is what we call a quick verification to check if a business is under pressure in a short term using the total current asset and the total current liability. Also, we can use the current asset ratio. All right. So after this verification, I see that okay, Google, this stock, okay, is not okay under pressure. Okay. So let's go now to the chart. Okay. So I'll go now and I'm going to look at Cisco. Okay. We look at 2010, 2011, 2012, and 2013. We can see that the stock has passed the Google Finance acid test. But should we buy it? How do we buy? Okay, this will be okay the subject of another video. All right. So do not use the acid test alone to make okay a buying or a selling decision. This is just one of the verification, very important. One of the verification that we can do to filter out risky stocks if we are bullish. Okay, very important. I'm going to put in now Cisco. All right. My charts. So what I recommend to traders, my approach is always, okay, about combining the technical and the fundamental. Now, the Google Finance Assistant is a fundamental analysis, all right? I will combine it with the technical analysis, which means I will come back to the chart and see the chart because the consensus, all right, is the chart. Whether you are fundamental trader, okay, speculators, long-term investor, short-term investor, whichever activity is taking place in the stock, it will be reflected on the chart. That's why I prefer to come back to the chart. I can use Fibonacci, Elliott wave, okay, by combining my Google Finance test with my technical analysis, I will be able to time, okay, my entry into the market, okay, more accurately, all right? So, you can see here, okay, I'm going to go now. Okay, you can see here, these are, okay, hold on please. You see, pay attention to the vertical line here. This is the beginning of 2010, you see here. You see? So where I'm moving my cursor, the vertical line. But you can see in 2010, the stock went down. This is Cisco stock, it went down. All right? In 2011, it went down again. Okay, you see here? It went down again. In 2012, it went up and then went down again. And in 2013, it started going up. All right? So that's why I say to you, the Google Finance Assist test is not the only okay verification one should use before buying and selling a financial instrument. All right? But as I told you, in the future, I will be recording more video, okay, that we can use, okay, before we can buy. But a long-term investor, it's very important for a long-term investor to know that the company can survive in a short term. Because if you want to, for instance, you have a portfolio with your bank, okay, with a dividend reinvestment plan, so you can go to your bank in London, okay, Halifax, Lloyds, whatever, NatWest Bank, Citibank, okay, and you say, I want to open, okay, a share portfolio, all right, you can open that account and you can buy each month, okay, stocks, all right, you can even set a direct debit and buy these stocks each month, all right? So, but you want to buy, so probably you are a technical trader, you do your verification, technical analysis, you are happy. But you want to buy, you can buy and hold for 5 years, okay? You can buy and hold for 10 years, okay? But it's not because you buy and hold and wait and wait and wait that the stock will definitely go up, all right? This is just crazy if that's the method that you are using. So you're going to check the fundamental, okay? Do your due diligence and then use the technical, and then before you check whether they have excellent products, are they gaining market share, do they have excellent management. All these are very important, because if they don't have excellent product and no one is buying their product and they're under pressure, under competition, they're not going to go anywhere, whether you have a technical setup or whichever verification you do, because the business must make money. All right, very important. Make money and cut their expenses. This is very important. So, after you have done that, you are happy now. You say, okay, I like Cisco. Okay, they are getting market share. They are creating new products. Okay, these products are selling very well. They are making a lot of money, and you want to know, and now you want to buy. So you will now use the Google Assist test to see whether the company you want to buy and hold for 5 years, you want to buy and hold for 10 years. Recently, I sold one stock that I bought nearly 10 years now, okay? And I bought and hold it, okay? I bought it and hold it, and I leave it there. I have my share certificate, and this year I sold it in profit nicely. So once you, because a lot of ordinary market participants want to buy and hold, so the Google Assist test will allow you to avoid risky stocks. So as I've shown you here, we have seen that Cisco has passed the Google Finance Assist test. All right? It's not always straightforward like this. All right? We're going to look at another financial instrument, okay? All right? This time we will look at Verizon, another American stock. It's not listed on the NASDAQ 100. It's listed on the Dow 30. Okay, Cisco is listed on the NASDAQ 100. So I'm going to put in now the EPIC for Verizon. If you don't know the EPIC, you can just put in Verizon. All right, it doesn't matter which stock you want to look at. Go to Google Finance. Once the Google Finance is open, you see here where it says Google, in the search section, put the EPIC or the name of the company. You see here, Verizon Communication, listed on the Dow 30. All right. Again, as I show you from the beginning of this video, we will click on the financial, remember that? And then we will click on the balance sheet, and then we want the annual data. Okay, this is Verizon. The first stock that we were analyzing was what? Cisco. We can see that though Cisco has passed the assist test, in 2010, 2011, and 2012, the stock was going down. So this is just a quick verification. If we have done our fundamental analysis and we want to buy and hold a stock, we can use the Google Assist test, this quick verification, to filter out risky stocks. We can also use the Google Assist test for day trading purposes. So the business come out and we see that, okay, they are under pressure this year. Okay, we will be giving what? Priority to sell signal, because the smart money will be checking whether they're under pressure. But as I'm saying it, or I'm repeating myself, the Google Assist test is not the only test. The company can be under pressure, but if they start gaining more market share, if they are coming out with more innovation, we cannot sell it, all right? Remember that. They can be under pressure for a year, but if they start gaining more market share, the market will quickly adjust their sentiment, which means they will say, okay, they're under pressure now, but they start making money. They create this product, and this product is selling very well. The projection for next year, they will make more money next year. They will double their profit next year. They will triple their profit next year. Though they have failed this year, their seed test, if they are gaining more market share and they are selling more products, start increasing their cash flow, they can remain in business. You understand? So do not use the assist test to go and sell or buy anyhow. Let's continue. So this time we are looking at Verizon. Again, this is 2010, this column here 2010. This is 2011, this column here is 2012, and this column here is 2013. We're going to compare again the total current asset, follow my cursor, to the total current liability. All right? In 2010, at the end of July 2010, Verizon has $22,348 million in total current asset. We're going to compare that to the total current liability. Look at this. The total current liability was $30,597. So you can see that the total current liability was higher than the total current asset. Once the post, at the end of July 2010, we can say that Verizon is under pressure in a short term because their total current asset is not sufficient to cover their short-term liability. Sometimes company can renegotiate their debt. So they may be under pressure. They will go to their short-term creditor. The creditor may trust them and say, okay, they are making money, or they start gaining more market share. Okay, we're not going to force them out of business now. They will renegotiate the terms and conditions of their borrowing in order to help them to survive, because the suppliers of goods and services want the business to be in business, so they can also supply their goods and services to them. So they don't want them to destroy the business. So they may negotiate the terms and conditions with their clients. So though you can see here, we can say they have failed the Google Finance asset test because the total current asset was lower, well below the total liability. In 2010, at the end of July 2010, Verizon, in the short term, was under pressure. As I told you before, there is another thing we call total asset and total liability. This is for the long term, all right? But what we are doing here, we are focusing on the short term, because if the company cannot survive in the short term, they cannot survive in the long term. They want to survive in the short term, keep surviving in the short term, in order to remain in the business for long term. So if we are bullish, we want to buy and hold, or we want to day trade or swing trade, we can use this quick verification to know exactly what the smart money is thinking. All right? Very important. So in 2010, Verizon has failed the Google Finance asset test. 2011, the total current asset was $30,939 million. We're going to compare that to the total liability. The total liability was also $30,761 million. So 31,000 and 31,000, they are still under pressure. They have a bit of room to breathe, but they are still under pressure. But one thing we can understand is that their total current asset went up from 22,000 to 30,000. So a big improvement, So they are catching up. Though they are still under pressure, they are improving because their total current asset went up from 22,000 to 30,000. But their total liability did not go up very much. So they are controlling very much. So it was 30,000 total current liability in 2010, and again 30,000 something at the end of July 2011. So they put their current asset, their current liability under control, and they are increasing their total asset. So though in 2011, they have failed their cheese test. Theoretically speaking, they have failed their seed test. Not completely, we can say, because the total current asset is just a little bit higher than the total liability. So we give them the pass, All right? In 2012, the total current asset was 21,235. We're going to compare that to the total current liability. The total current liability is 26,956. Again, Verizon has failed, the Google Finance Assist test in 2012 because the total current asset is lower than the total liability. They are again under pressure. They were under pressure in the short term in 2010. They managed a little bit to improve in 2011, but in 2012, again, they are under pressure. Let's see the recent figure in 2013. In 2013, the total current asset was $70,994 million. We're going to compare that to the total liability, the total current liability. The total current liability was 27,050 millions of dollars. So we can see that a great improvement, 70,000 compared to 27,000. Beautiful, Really beautiful. More than 2 times the current assets the total current asset is more than double the total current liability. So we can also see a trend here, though the total current asset went up in 2011, went back down in 2012, it went up significantly in 2013. You can see that it tripled in 2013. You want to know why the current asset went up so big. You want to know, have they made so much money? Have they gained too much market share? Have they got more clients? Do they have a new management? Okay, so probably they were making more money than the last 3 years. So from 22,000, 30,000, 21,000, they went boom straight away to 70,994 millions of dollars. A big improvement. We want to know. Now, at this point in time, they have passed the test, but we will ask the next question, will they be able to hold on to their gain? A company may go up, may pass their seed test, but they may have already peaked so much that they are now ready to come back down. All right? So here they have passed the test, but there are other verifications that we must do before we can decide to buy and hold for long term and know, okay, and make an excellent decision. As I told you, the seed test is a quick verification to check if a business or a company is under pressure in a short term. This will allow bullish short-term market participant or long-term market participant to avoid risky stocks. We are using the current asset and the current liability. Also, we are using the current asset ratio. So now let's go back to the chart. So they failed the test twice, okay, in 2010 and also 2012, and they passed the test twice. But in 2011 was not a beautiful pass, but in 2013, a significant improvement. But now let's go back to the chart and let's combine the technical and the fundamental. This time, we will look at the Verizon stock, okay, the APIC is VZ. By the way, the trading software that I'm using here, this is TC2000. Verizon Communication. Again, I'm going to the monthly chart. Pay attention to the vertical line. The vertical line represents the year. So from this vertical line to this vertical line, this is 2010. So Cisco has failed the test. The price went down before going up. So though they have failed the test 2010, one thing I want traders to understand is that if they have failed the test, all right, so here you see in 2010 they have failed the test, but if you look on your left-hand side, the stock has been going down for some time, okay? For traders that understand the area well, you can see that, okay, we have a ABC here, okay? So the stock was going down, so before they have failed the test. So probably, okay, the market already knew and has already priced this failure into the price. So if a financial instrument has failed, okay, the Google Finance Asset Test, but the stock has been going down for a long time, we want to know whether, okay, the test is already priced into the stock. All right, so we can see that why the market was selling Verizon. So they were selling Verizon since 2000. So they were selling it after 2003. It went up a bit. They sold it. So everybody was selling this stock. But in 2010, they have failed their seed test. But now, this can be difficult for new market participants to understand because they have failed the test. But we want to know whether this is already priced into the price. Okay, into the stock. So it looks to me, looking at the chart, though they have failed the test, technically speaking, because I want to combine my technical to the fundamental, I know that the stock was going down for a long time. Now they have failed their seed test. The next thing we can check is to go back to Google Finance and to refer to the economy news. You see here? You can click on the news, and then you check all the news relating to this Verizon stock. You can also go to Verizon website to see the news there, and have they changed the management? Are they making more money? what kind of product they have, this telecommunication company, and what are they getting more clients? Are they getting more market share? So, do they have fairy tests? Are they getting more market share? Are they making more money? What's the future prospect for Verizon? You see now? We can also, for day traders and swing traders can use the quarterly data instead of the annual data to see, okay, the short term, okay, acid test, okay. So you can use the annual data if you are a day trader to see what's going on a weekly basis, on a monthly basis. If you are a long-term investor, you can use the annual data because you want to buy and hold for a long period of time, 5 years, 10 years. You can use the acid test on the annual data with the annual data, okay, to see whether the company can survive in the short term or if it's going to go into administration. If they're going to go into administration, you don't want to buy and hold. So the Google Finance acid test will allow you to avoid, okay, a risky stock. This is the end of this tutorial about how to use Google Finance acid test. I hope you have learned something from it, okay, and we put it into use, okay, to make excellent trading and investment decision. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon. This is about how to use Google Finance acid test. Thank you.